This is part 2 of a 3-part video series where we look at numerous markets and numerous possible outcomes. We examine traditional as well as DeMark charts. As of Sunday night, it appears as if the alternate case has picked up a little bit of steam, being that a significant low is already in place for stocks. By no means has the base case, which would be a move towards this level followed by a rally, been wiped out. In the video, we discuss numerous levels that we can monitor to help us to determine whether we're moving towards this case or this case. At any time during the video, you can use your pause button here if you want to go at a little slower pace. Part 1, we focus on these markets. Part 2, these markets. And Part 3, we look at copper, commodities, treasuries, and semiconductors. You are currently watching Part 2 of a 3-part series. If you'd like to improve the resolution of these charts, you can adjust the resolution here on the lower right-hand corner of your video player. It's Sunday night, June 10th, a little after 7 p.m. We're looking at a DeMark chart, a daily DeMark chart for the E-mini S&P 500 futures. DeMark charts and indicators are provided by Market Studies, LLC. A few points here. The futures on Sunday night popped up to this propulsion line. The numbers that we will be watching, you may want to keep in your back pocket, are 1343 and change on the futures. That's somewhat of the momentum demarcation line. As long as we stay below that level on the futures, this propulsion target of 1244 on the downside is something from a probabilistic standpoint that we still need to factor in. It's still possible that we could have some downside here if we came down into this area on the futures, and in this direction on the S&P 500, we would pick up a lot of counts from DeMark, but it's not necessary. And if we move above 1343 and change on the futures clearly, especially if we close above it, the odds of moving towards this new higher propulsion target all the way up at 1431 and change increase. So this figure here is relatively important. In this video, we highlight some potentially bullish developments for the short to intermediate term. Just want to point out there's several concerning things longer term relative to this market that still appear to be bearish. This is VEU, the Vanguard All World ETF sans the United States. This is a DeMark support level at 4105 on a monthly chart. It's clearly been violated. That's very concerning. This green line, the momentum demarcation line, acted as resistance, which says realistically that the bears or the bearish momentum remains in place on this monthly chart. We'd feel much better about the big picture if VEU could clear 4105. This is a level that will remain in place. A lot of levels change in DeMark charts. This is a good one to write down and keep track of. A close above it is good. If we stay below it, we still want to show some caution for the longer term. Moving to a weekly chart of VEU, and keep in mind, this is basically the whole global stock market taking out the United States. So if there's weakness or strength here, it tends to impact almost all risk assets. This is a mixed chart. This is a propulsion target. Very, very positive that you're getting price holding near this long-term propulsion target on a weekly chart, and that you've got a buy setup here and an arrow. The short-term concern would be we're still below, as of the close on June 8th or on Sunday night, below this support level, this TDST DeMark level. The one to write down here is $39.56 is an important level. Below it, we remain relatively concerned. If we can break above it, we would feel better. Now we're looking at a daily VEU chart, somewhat of a mixed bag. This is a bearish break. However, it's offset by this 9 up and this 13, which is bullish. So on a daily chart, you're also seeing DeMark buy setup and a confirmation with the 13. This is the aggressive combo count. This looks good for a potential rally in the short term. If you look at some of the other counts, they also leave the door open to lower lows. This is the combo count on a 9/11. We've also got a propulsion target that just appeared on Thursday. So this is Thursday, this is Friday. So there is still some magnet price area below in DeMark speak. If we can clear 39.79, the odds shift towards 42.05. So this still leaves the door open to being bullish or bearish. We'll be watching these levels. We wouldn't be surprised to see it come down in this direction. Regardless of what's happened in Spain, this door is still open. If we move above here, this door becomes a little bit more attractive. This is a daily chart of the S&P 500 that we showed several weeks ago. This is a shoulder, a head, a shoulder. We forecasted that we could fall either this distance for the blue line or this distance for the green line. Came down, went past the green line. We stopped almost exactly on cue near 1280, the level that we identified a few weeks ago. This is actually your support level around 1277, I believe. Head and shoulders target met. You can see this held here. Leans towards the bullish camp. We would like to see this high, so this would be the high of Thursday, exceeded on a closing basis, and the high here exceeded on a closing basis above 1330. What once was support can now act as resistance. So if we're able to make it up into this area, these two necklines here around 1368 to 1370 or 1385 to 1390 may act as resistance for price. Rate of change, when it moves above the zero line, this is price, tends to be bullish. When it moves below the zero line, price tends to be bearish. This is hesitation. The bull market continued. We've been in hesitation/bearish mode. With last week's gains, especially on Friday, we moved back above the zero line. All things being equal, the longer we stay above the zero line here on rate of change for the monthly chart of the S&P 500, it leans bullish. Updating this daily chart of the S&P 500, these are Fibonacci retracement levels. They appear to have held as support. One here near 1259, 1260, price bounced in that general area. We're back above the 61.8 on this chart, which is 1297. This is the same principle. This is a weekly version of Fibonacci retracements. The previous chart was based on closing prices. This chart is based on high lows, similar levels. The market is trying to hold here near 1289 and change. If 1289 and change does not hold, the next potential targets would be 1248 and 1207. All things being equal, it appears to be positive that we came down and tested the 1289 area and seem to have passed, closing at 1325 on June 8th, 2012. This is general support and resistance levels on a monthly chart. It appears as if the 1250, 1274, 1290 area has somewhat been tested here and held this long tail here. All things being equal, that's a fairly bullish looking candlestick. Reason for showing it, 1354 is a level to watch in the upside. If that's cleared, 1440 based on these levels could come into play. From a bearish perspective, if we take out 1250, 1200 or around 1195 is logical based on this method of deriving support and resistance levels. This is a chart we've shown several times. These are parallel trend lines based on the March 2009 lows. Price held here is support, here is support, here is support. We hypothesized that this blue line may act as support. So far, so good. If this line gives away, we could come down towards 1220. If we hold, then moving back up to the top of the trend channel above 1400 towards 1440-ish seems to be fairly logical. This is an update to another chart we've shown several times. This is the Vanguard All World Index, sans the United States, ticker symbol VEU, daily chart. Point of the exercise was this is a trend line from the October 2011 lows. We hypothesized a few weeks ago that one of three things would happen. This trend line would either hold, which it did not on the first bounce. The other scenario would be a vertical bearish break. We didn't get that. The third scenario was somewhat of a bear trap or a bearish head fake, where you break below the trend line, shorts come in here, sellers come in, and then the cruelty of the markets is we reverse. All things being equal, the close above this pink trend line on June 8th leans towards the bullish camp. However, you can see the 20-day moving average last week at 39.08 acted as resistance. A next logical step would be to close above the 20-day. Updating our chart, we've shown again in the past VEU daily parallel trend lines seems to have acted somewhat as support in this area. This slant divergence that we pointed out seems to be in play. This is a bullish divergence. Price makes a lower low. The indicator makes a higher low. Resistance, what once was support, now may act as resistance between 40 and 40.50. If VEU can clear this level here, then this upper trend channel may come into play with a move towards 42.50. This is an update to the weekly chart of VEU we've shown in the past. 22-week moving average, when the slope is up, good things tend to happen. When it rolls over, this is price, bad things tend to happen. Flattens out, moves up, good things tend to happen with price. We've been in indecision mode. This appears to be bearish here. It's still leaning indecisive to bearish as of the close on June 8th. However, there are a few developments on this chart that occurred last week that do give the bulls some hope. This is your MACD histogram. It ticked up. This can foreshadow a higher move in prices. It can also foreshadow a bullish cross in MACD, which foreshadowed this bullish move in price. The other thing the bulls can hang their hat on, the red ADX line started to roll over, indicating a weakening downtrend. As you can see here, you can make lower lows in price after that happens, but it still tends to be indicative of a bottoming process. If you're a bear, you want this line to stay with a positive slope. If you're a bull, you want this black line to roll over. This is a weekly chart of the VIX, the volatility index. A few points here similar to a chart that we showed, a weekly chart of VEU. This is a bullish trend in the VIX. The MACD histogram on the weekly chart ticked down last week. When you tick down, it can foreshadow a reversal and a subsequent downtrend. When you tick down, it can also foreshadow a bearish MACD cross. Bearish price action followed. The other potentially bearish development is the black MACD line looks like it's trying to roll over. It has not rolled over. Typically when it rolls over, it's indicative of weakening momentum to the upside. Indicative of weakening momentum to the upside. Price fell relative to the VIX. Down tick here in the histogram foreshadowed a bearish MACD cross. This is another thing that we'll be monitoring. Nothing says that this can't tick back up with a spike in fear, but as of the close on June 8th, this tended to lean bearish for the VIX and bullish for stocks and risk assets in general. This is a daily chart of the S&P 500 index. We have shown this several times. 390-day moving average is this line. Acted as support, 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 roughly resistance, support. Looks like it acted as support. Price has bounced off it. As long as we stay above it, it leans towards the bullish camp. The number to watch is 1288.59. This is a daily chart of the S&P 500 index as of a close on June 8th. Few points here. Williams %R was able to clear negative 20 very, very late in the trading day on Friday. That tends to be bullish, all things being equal. You want to reach this level. If you don't, it's a red flag. We've reached it, so it's removed one yellow or red flag from the bullish case. Some things we'll be watching next week. Even with the gains last week, RSI, the relative strength index on a daily chart of the S&P 500, still closed below 50. Two levels we'd be watching. Like to see it close over 50. It tends to say that we've shifted from bearish control to bullish control. But more importantly, rallies often fail somewhere in the neighborhood of RSI 57 or 58. This is another level that we'll be watching. Just updating this chart, we've shown in the past long-term trend line going all the way back to 2007. Resistance, 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 bullish break. Looks like this was a bearish head fake potentially. We closed back above this long-term trend line last week. As long as we remain above this trend line, it leans towards the bullish camp. It's extremely important in an environment where we have an election coming up in Greece. We have a potential bank bailout coming in Spain, as well as a bailout for the country of Spain. And at any time, we can have central bank intervention. Have to remain flexible, shouldn't be defending forecasts. When you start defending forecasts, you start arguing with the market, and that can be extremely expensive. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.